friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders by simplifying chart analysis and financial markets. So if that's something that you're looking for, you are in the right place at the right time. Now, to all of my returning subscribers, welcome back, guys. I'm so grateful for the engagement that you've been having on the videos, whether you guys are asking questions or sharing or even registering for personal mentorship. I really appreciate it because it's all about sharing the knowledge and honestly spreading the wealth. Now, if you are a new subscriber, welcome. I hope that you have found yourself a home and a place where you can really make these concepts easier so that you can start getting the results that you want. Now, I do encourage you guys to explore the channel, click around, watch the playlist. I try to keep it in order and update them as often as possible just to keep it interesting and filling in those knowledge gaps of people who truly want to learn. Now, if you appreciate my videos, my content, and you like my teaching style, you can actually register for personal mentorship with me. I did launch my own e-learning platform that's pretty much self-guided. You can log in anytime. You can learn at your own pace on your own time. But we also have live sessions every Sunday at 6 p.m. EST. If that's something that you're interested in, you will find more information down below in my description box. So in today's quick video, we're going to be talking about one of my favorite topics when it comes to trading, and that is indicators, right? Indicators are the technical tools that you use to analyze the market. Now, you should not wholeheartedly rely on the indicators alone. You should understand price action. And if you're still struggling with that, make sure you check out my candlestick videos playlist because candlesticks are what the market is made up of. And if you can understand price action, you can literally do anything, but indicators only help make it easier for you to confirm what you're actually seeing. Now, what a lot of people don't know is that indicators actually fall into different types of categories, and there are certain things that you should look for when you are entering a trade. So, for example, one of the types of indicators that I like to use are trend indicators, and trend indicators help me to determine which way the market is going. Now, this is important because if the market is going up, I don't want to find myself in a sell and losing money when I simply can just trade with the trend. So now TradingView offers hundreds of different indicators, but some of the simplest trend indicators that I found to use are the EMAs, and I'm going to show you why I love them and how easy it is to see. But before we get into that, let's just focus on some price action, and price action is literally what's just happening in the market. So right now we're looking at GBP JPY on the weekly time frame, and we can see that this is an uptrend. Now the market typically goes, it doesn't always go one way, but it will have an overall trend. Now, if it's an uptrend, the market will be moving consistently up, like we can see. This entire section is an uptrend, but we can see these huge push-ups here. Now, what you are going to notice is that in the midst of an uptrend, you do have some retracements or some moments where the market is trending down as well. And this can be confusing, especially for new traders, because if the market is constantly going up and down, how do you know when you want to actually enter that trade for a buy or enter that trade for a sell? So I'm going to show you guys one of my favorite trend indicators, which is the EMA, which stands for exponential moving average. It's very easy to use, and I'll even give you guys a EMA strategy that you can use or build on as you continue to learn. So the first thing that you want to click is indicators, and you can type in EMA. It's going to come up as moving average exponential, and you want to click on it. Now there is a list of other ones under technicals, but we're going to stick with the OG, and we're only going to add one for now. So as we can see, in addition to our red and green candles that have popped up on the chart, we now have this blue line. I'm actually going to go in and make it a little bit thicker so that we can see it better. And if you want to do that, you just click on your settings gear, you click on style, you head over to the blue box, and then you go ahead and make the line as thick as you need it to be so that you can see it on your chart. And there we go. My blue EMA is on my chart. That was easy. Now, how you use this trend indicator is you pretty much want to figure out or take note of where the candles are in regard to the EMA. It's very simple. Let's actually take this down to a smaller time frame. So you'll notice that when the candles are above the EMA, the market tends to be on an uptrend. And as we can see from this short collection of candles, the market actually continued to push up, right? It continued to push up, it hit a high, and it wasn't until the candles crossed back below the EMA that the market started to sell. And that was pretty easy, but I'll explain it again. When the candles are above your EMA, you want to focus on buys. When the candles are below your EMA, you want to focus on sells. Now, before we move on to the next part of this training, I'm just going to go back in time to show you guys how relevant and true this is and how you can actually use this to find your trade ideas. So let's actually back up to a place where we can see the market was on an uptrend, right? We can see that the candles were clearly above the EMA. The market was pushing up. Now, I'm going to press play and I want you guys to watch what happens once the candle starts to cross below the blue EMA and then once they start to close, meaning that the bottom of the candle is below the EMA, especially for red candles. We see the candle has crossed below the EMA. It tried to retest, but now that the candles are opening and closing below the EMAs, this has set off an amazing downtrend. And as we can see, the market is continuing to drop. And all we did was take note of where the candles were in relation to the EMA to determine our trend, and it helped us find an entry point. Now we're actually going to let this play out. We're going to let this play out and we're going to see what happens once the candles start to cross and close above that EMA. We can see that a buying trend has been started. And look at it. It's like clockwork and it's very simple. It's only one indicator, one line that you can start using today to really improve your trading strategy, right? And just your understanding of indicators. Now, one indicator is really good, but let me show you what happens when you have two EMAs that will tell you about the trend. So this time we're going to head over to indicators again. We're going to add a second EMA. Remember, just search EMA and moving average exponential will come up. This time we're going to go into the settings. We are going to change the color to purple and we're going to change the length to 10. And for our first EMA, let's just go back and we're going to change the length to 3. And this is the only modification that we're going to do. So now we have two EMAs on our chart. We can see our purple EMA and we can see our blue EMA. And I'm going to show you guys how to use this strategy to, again, help you find entry points. And remember, this is just one type of indicator that you can use, which helps you to identify and to confirm the trend. Now, this strategy I like to call the double EMA strategy because we have two EMAs. And this is what I want you to look for in this strategy. And you can watch my other videos on this as well. When you see that your blue EMA or smaller EMA has crossed above your purple EMA, that is going to confirm an uptrend. Right? And here's another example of that. Once your blue EMA crosses above your purple EMA, that's when you're going to want to get into a buy because it's confirming an uptrend. Now, on the flip side, when your purple EMA crosses above your blue, that's when you're going to want to enter for a sell. It's pretty simple. This is one indicator used two ways, and it helps you to identify what the trend is going to be. Now, that's awesome. Now, the next type of indicator that we're going to talk about is indicators that show you when price has been overbought or oversold. And my favorite indicator for this is the stochastic. So we're going to go ahead and click on indicators, and then we're going to go to the stochastic. And again, I'm not going to change anything on the stochastic except make my lines a little bit thicker so that I can see them better, but I'm not going to change any of the inputs. This just makes it simpler for me. Now, what the stochastic is telling you is whether price is overbought or oversold. And what this means is that if there are too many buyers in the market, the market's going to start to sell so that it can readjust itself and level out. If there are too many buyers in the market is going to sell. If there are too many sellers in the market is going to start to buy. An indicator like the stochastic will highlight this for you. So what you'll notice on the stochastic is there are three dotted lines. There's the top line, which is the 80% line. There's the middle line, which is the 50% line. And there's the bottom line, which is the 20% line. Now, what you'll notice is that once the market crosses below the dotted line, it is now considered oversold. That means that the market was selling for so long that it had to eventually turn around and buy. And let's just go ahead and look at this example right here. We can see that the market was selling, right? It was indeed selling for this period of time. And we can see that being reflected on the stochastic. Now, it was selling for a couple of hours and it spent some time in the oversold zone. But once it crossed back up above the 20, that is when it was in the safe zone. And we can see the market actually started to buy from that point. So once the market becomes oversold, you notice it's coming off of a huge uptrend. It'll start to dabble in this area, but not until it crosses back up above the 20% line do you want to enter that trade for a buy. Now you can start to look for other confirmations and to prepare yourself once the market is oversold for a buy because it won't always happen automatically. Here's another example of the market coming off of a small selling trend. And this is the 4-hour chart. So this was about a day the market was selling. We can see that it pushed into the oversold zone below the dotted line. But once the market crossed back up, that is when the buying trend actually started. Now, in addition to being oversold, the market can also be overbought. And overbought means that there are actually too many buyers in the market. So let's see what happens from the same point. We see that the market was going up, right? The stochastic is also reflecting this. The market was going up. And then we see, again, the market crossed above that 80% line, but it didn't quite start to sell yet. However, it did let us know that the market was overbought and that a sell was imminent. Now, you don't actually want to enter your sell until you see the stochastic cross back down below the 80, right? So having an indicator like the stochastic lets you know when a reversal is about to come. And again, I will just scroll back and highlight some more examples of this for you. Here's a huge buy. So here is another great example. We can see that the market was selling up here. We can see the same thing reflected in the stochastic. We can see that the market was oversold, right? We had a little bit of a push up. It came back down into being oversold again. And then once it crossed back up above the 20, the market continued to push up, right? It continued to push up. Now, we did have the market spending some time here in the overbought area. And you'll notice when the market is overbought or oversold and it's in that zone on the stochastic, it'll also be consolidating, right? So then we have the market being oversold here, and then we can see the push up for the buy. We can see the market being overbought here. Same thing reflected in the stochastic, and then it comes down. So the stochastic is pretty easy to use with helping you to identify reversals, and it just tells you a lot about price action in general. I like to say it's 5 indicators in one, but it is good to know how it works. Now, if we put all of our indicators back together, let's see what happens when we look at the confirmations. If we were to come back into the market at this place here, right? And I'm just going to rewind it. Let's just say you were in the market at this time and you didn't quite know what to do. Let's pay attention to what our indicators are telling us. We can see that the market looks like it has been consolidating for a little bit, but we do see that the blue EMA is preparing to cross above the purple EMA, letting us know that a buying trend is going to start. We can also see that the stochastic has already crossed from being oversold coming off of this trend, and it's probably going to go up. And that's exactly what happened. So let's just press play and let's just watch it develop. Okay, we see that crossover happen, and then we see the market continuing to push up. And we see the market is clearly overbought right now, but it's still going up because remember, you don't want to hop in that sell right away until you get those sell confirmations, right? So we see the market is still spending time in the overbought area, but once it crossed below that 80% line on the stochastic, that's when we have a clear indication for a sell. So indicators don't have to be stressful. They don't have to annoy you. Even if you wanted to try this strategy with just one EMA, let's take away one of them. One EMA in the stochastic, the same thing still rings true. So let's just find one last example, right? And here is a really great example. Here is a really great example. We're just going to go ahead and play this for a little bit, right? We can see that the candles started on this small red candle. It started to cross below the one EMA. Once it crossed and closed below that EMA, you also have the stochastic facing down, confirming that this is going to be a selling trend. And we can just go ahead and watch and see what happens. Now let's just pay attention to once the candles cross back above on the stochastic and the candles start to cross and close above that EMA, that's going to be our signal for the buying trend. Now it hasn't happened yet, but I want you guys to just watch it in slow motion. And I really want you to pay attention to these signs and signals because indicators don't have to be stressful. They don't have to be hard to use, and you can make money from trading. So this looks like where the change happened, and we can see that uptrend starting to happen like clockwork. So that's really all I have for you guys today. I wanted to give you some insight into indicators. I will be doing more indicator videos. If you like this video and you want to see more videos like this, please let me know in the comment box below. If this video was helpful and you learned something and you're going to incorporate this into your strategy, let me know that in the comments as well. And if you guys have any questions, feel free to ask. I always get back to people as soon as I can. But that's really all I have for you guys today. Until next time, rich friends.